521.
Target card for parking problem.
Yo, what's on for the Cub? Welcome back to the channel. If you're new here, I promise you will not regret checking out the rest of my content. So real quick, I'm just going to show you how exactly to set your take profits and your stop losses, because risk management is the most important thing when it comes to forex trading. Period. That is the most important thing. It's more important than a strategy. All right. Having that risk and reward management, I say it's more important than the psyche that goes behind the psychological behind your trades, because you first need to know exactly where you're going to set your stop losses and TPs. You have to already have that in mind. Okay, that's what sets up the whole mindset behind your trading strategy. Knowing exactly what you're going to do once an opportunity comes, right? So I say that's more important than the psychological, because even though the psychological is important and it's more important than a strategy, if you're the most disciplined trader but you don't have you don't know where to set your stop losses and where to set your take profits, then why does it even matter? You know what I'm saying? Why does it even matter that you're disciplined? You don't even know where you're going to set your stop loss at. So if you're in a red, what are you just going to let it continue to go in the red until you blow your account? You have to know where to set your stop losses. So really simple, really simple. This is a nice setup. We're on a 5-minute time frame on the S&P 500. I love this pair. I love to trade it during the New York Stock Exchange Open. I love to trade it around that time. If it's not Friday, because I only trade Monday through Friday, but besides Fridays, because I avoid afternoons. I avoid afternoons at all costs when it comes to Fridays, because it's the last trading day of the week. So it gets a little wonky, but I'll trade the S&P 500 during the New York Stock Exchange up until maybe like around 4 or 5 o'clock ish. Okay. 4 or 5 o'clock p.m. We're talking about in the afternoon or the evening. Besides Fridays. Fridays, I only trade the morning. And then I just completely avoid Sundays at all costs, because it's the opening of the new trading week. So it's just a little wonky, just a little bit off. So I avoid it. Now, again, really nice setup here, because we already have a box drawn here to show that we have support that turned into resistance. We can see that price came here and then shot up, creating support, right? Then we see that we have multiple touches up here and then it dropped. So I drew up this box, but not on the 5-minute time frame. I drew it on the 15, so that's why it's so big. I drew it on the 15. I drew it from the wick to the body. That's support. I mean, that's resistance. All right. So when you come down to the 5, what do you say your take profit at? Well, let's see. Let's look at our entry, because we got to know where to enter first, right? Let's say we just saw price broke this resistance here. Then we was like, okay, we see it broke this box. Let's see if it'll break above the tallest wick, which it did. If you wanted to be aggressive, you could have got in right here, or you could have waited until the candlestick closed. But I know how y'all are, so you probably would have entered here because you want to get in early, right? And then I would have set my stop loss right below this wick. And then I would have went for a 1-to-1. That just means you're risking the same amount that you're willing to make. Simple. Now, this 1-to-1 is nice because it's not even at the box that I drew here. So you have a better chance of price coming up to this level here than to this level. But you could also place it right in the middle. So that's what I would recommend, placing it right in the middle, or you could place it right where you have the 1-to-1, and yeah, simple as that. Now, the reason why I say to set your stop loss below the previous candle's wick or the lowest wick if you're in a buy is because you want to trade with the banks. We know that banks like to hunt stop so they can take your money and just explode price up to the upside or just melt it. You know what I'm saying? If they know that there's a lot of traders down here with stop losses, then they'll stop hunt, take people's money, and then place a bunch of big positions here, and you'll see price shoot up. So that's why I set my stop loss below the wicks, just to be careful, because a lot of times, let's say if you were in a buy here, a lot of times people will set their stop loss too tight. They'll set their stop loss up here, or they'll set it right at the wick, and then what happens is price will come down here, you'll get stopped out, but then it'll come up here and it'll hit your take profit, or your take what would have been your take profit if you didn't get stopped out. You know what I'm saying? So to avoid that, we allow a little bit of wiggle room below the wick. So even if it comes here to this level, we're like, okay, we still got a little bit of room left. Let's not panic or anything. We got a little bit of room left, and then it can shoot up and you make money. You know what I'm saying? And then if it hits your stop loss, that's cool too, because again, we have good risk reward management. Good risk management. So let's say you're a guy who always has a 1 to 2 risk reward ratio. It would take you 2 losses. Okay? It would take 1 win to cover those 2 losses. You see what I'm saying? Because you're willing to make twice what you're willing to risk each trade. So let's say you did get stopped out here, and let's say you always have a 1 to 2. Let's say you did get stopped out right here. Okay, that's cool, because now you see, let's say maybe price has let's see, maybe price did one of these. Boom. So let's say price broke this support, retested, and then it gets rejected. Now this support turned into resistance. Now you're looking to get into a sell here on a bearish engulfing candlestick, and then you running it up. You put your stop loss right above the wick. You got a 1 to 2, maybe even a 1 to 3, because look, we don't have any recent price action in this area, so there's a lot of room for this to go, and it's really that easy to compound your account. It's really that easy. See, like here's a trade I would get in. If I see price breaks above this wick, I would enter here. I would set my TP here. I would set my stop loss right below the wick. I see that's not a 1-to-1. So I would raise it to the middle of this zone. Simple. We have a 1.1, meaning that I'm trying to make just a little bit more than what I'm willing to risk. It's that easy. It's that simple. This is how you compound your account. This is how you flip small accounts. I've flipped countless accounts. Bro. Go watch my video. It's like a 30-minute long video where I'm going over my setup. I'm showing you that I'm trading live. I'm trading on a live account. I'm trading in the real Forex markets. I'm showing you how exactly I made money on the S&P. In that video, I show you where I got into a sell, like I think around here, and I got out right where this wick ended. Like literally, it was perfect timing, and I made like $9. I used the minimal lot size, so it was a 0.01, meaning I'm risking 10 cents per lot. Simple. I made $9 in just literally like less than 10 minutes. Literally, I made $9 and some cents in less than 10 minutes. Because this is the 5-minute time frame, so meaning every candlestick that you see is 5 minutes that has passed. And as you can see, we did get a break above this wick, so I think it's safe to say that this may very well go up here. And it's really, really that simple. It's really that simple. Let me break it down one more time about the banks. So what banks will do is they will drive price up to this point. Okay. This is what they usually do. They'll drive it up to this point. There's a lot of liquidity up here. They know that there is sellers up here with stop losses. They're going to hunt stop. Once they get enough, once they take enough of people's money, then they're going to drive price back down. See, the reason why they did that is because they had to give their buddies a second chance to get into a sell. They didn't get in right here when they could have. So they're going to drive it up here. And then whoop, you're going to see it come down. It may not come down to this level. It may not reach this level. It may not reach this level. This is support here, by the way. This is a support level you could draw out if you want. But that's ugly. I'm gonna just leave it right here. It could come down to this level. Maybe not. Maybe it will only come to this level. You have a better chance of it coming down to this level than this level, though, I'll tell you that. But let's say you get into a sell here, and of course you have your stop loss above the high. You have it above the swing high. You could take it down here, bro, for a nice 1-to-5 risk to reward ratio. That is nice. That is really nice. Easy. Maybe you'll get into a sell like around here. Still 2.6. Easy. Simple. Beautiful. Beautiful setup. It's a beautiful setup. And I really think that we're going to see a push up to the side. So, and that's that. I'm going to leave it at that, man. You have a blessed one. Peace. I'm out. Stay safe. Don't forget to leave a like, comment, and subscribe. Hit the bell button to get all notifications. And let me know what you think. Peace. I'm out.